Ladies and gentlemen, welcome to the Daily Update. My name is K Kim. I will be analyzing this market with you guys. We'll be looking at S&P 500 65-minute chart and trying to figure out what we can expect going into tomorrow. Hope you guys had a good day trading, but it was a little bit, bloody day. At one point, it was about down 2% on the day. However, I've said this before, 2% down day, you kind of have to look at that as a normal down day. Remember, when there's a down day, usually about 2% is a normal down day. 2%, 1.5% is a normal down day. It gets up to more than 2, about 3%. That's a heavy selling, anything more than 2%. But it ended up closing the day with the 1.3, 1.4% down, which is a normal down day, I think. So looking at things in the short-term perspective, it looks like this is a first hour, and then a second hour, and that's a third hour. So it looks like all those candles are evenly shaped, length, candlesticks. So very evened out selling pressure we saw first hour, second hour, and third hour. And on the third hour, you see that we found support here. If I zoom out, you see what that rising support looked like. But my midterm moving average, that blue dotted moving average, is residing in that vicinity. So we actually found similar candlestick pattern here on the third and a fourth hour, right? And that's what people call, the Japanese candlestick analysis call tweezer bottom. Because they look like a tweezer, right? The tweezers where you pluck out things, your eyebrow or something like that. So they look like a tweezer, so they call it a tweezer bottom. And what happened back in 21st of December, we got above it, and then we saw follow through. And you need all of this for reversal. You need to see a follow through to the upside, and then reclaim my short-term moving average, and wait until my short-term moving average start to rise. And that time you can say that the trend is reversing, and you could say the benefit of the Dow goes the buyers in the short to micro term. Right now we're just underneath my short-term moving average. We kind of did see a follow through here, right, breaking above that micro term neckline again, but it's just we need to see the price reclaiming that short-term moving average like we saw here, right? And the next day, you see what happened here. It was reclaiming short-term moving average, and it was staying above the short-term moving average here, 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 and here. Well, here, we're actually still below my short-term moving average. So we want to continue to give benefit of the doubt to the bears in the short to micro term. But with the little bit of push that we saw in the last 3 hours, we need more for the bears. Buyers can say, you know what, this market is ready to reverse. We can't say that yet, because we don't have that evidence where the buyer's reclaiming that short-term moving average. We're talking this moving, all right? It's been acting as support. So keep in mind, because what happened last time was, you see how there's a decline here, and then it looked like it was bouncing here, but it struggled underneath my short-term moving average, and then we saw another gap down. And I think that was a pretty sizable gap down. I think about 2% gap down, if I'm not mistaken. So we're just right at it. That's that inflection point in the short to micro term. If buyers want to see any kind of momentum back up to 375s and 376, they need to reclaim the short-term moving average and stay above it like this here. It could be days, but stay above it. Hang on above the short-term moving average. And this is how buyers like to operate. They like to gather momentum by, by moving sideways and then push it up. So basically what we're trying to figure out is, are we looking more like this here until next day gap down or another downturn? Or are we more like here, like right there, before we see a next, bullish run next day, and then sideways and run up, right? So we'll know more about that tomorrow, how this market is going to behave. Let me zoom out and you see where the rising support is coming from right here, right? That's the support, that's the support, that's the support, that's support, that's support. What does this tell us in the midterm? Well, in the midterm, we can say that these are what? Higher lows, right? And higher highs. So we still do have uptrend intact in the midterm. We're talking, in the last month or so, month and a half or so, we are still in an uptrend, right? We've seen these abrupt declines before, right? And until the trend changes with the lower highs and lower lows in the midterm, I want to continue to give benefit of the doubt to the buyers in the midterm. So in the micro term, I'm bearish because we're still below my short-term moving average. There is that buying or selling pressure we saw first 3 hours this day. In the short term, I'm being more neutral in the short term because in the short term, I'm not sure if we're gonna see any kind of I'm not sure in this inflection point with that short-term moving average, are we gonna see a downturn or are we gonna see a follow through tomorrow staying above my short-term moving average, right? So short-term, I'm neutral. So micro-term bearish, short-term neutral, and midterm is bullish with those higher lows and higher highs until I see this thing breaking below it, retesting it, and then start cultivating lower highs and lower lows. We see something like that, we have to say, you know what, things are looking a bit more bearish in the short to midterm. But right now, we are holding that support. It is no coincidence that we found support last 3 hours, just right on the rising support and right on that midterm moving average, right? It is no mistake that we did that. But it's not like that doesn't mean it is guaranteed to get back up. Buyers need more. Remember we talked about the short-term moving average, right? Let's check out that oscillator. So oscillator is actually not supporting this move. We actually whipsawed back down. We actually haven't seen this kind of whipsaw. Let's see here. Nothing similar yet. This is something new, right? Because we've seen where this thing comes down, and then when it crosses up, usually it gets back up, right? It comes, you know what I mean? Like it comes down and then crosses up, usually gets back. Oh, you might have a little whipsaw right here, but this one came down and crossed up, and it continued to curl down, advance lower, and we even made lower low here on that oscillator. So the oscillator is actually favoring the bears, and bears are not quite tired yet. If they really want to push down, they can actually push down another day. We have enough room to push it down here. If they really want to push it down all the way down here, but it's been finding support. Bears been actually getting tired at these levels recently. So this is what's going to happen is if the buyers push it up tomorrow, if we see the market advancing to the upside, the price advancing to the upside, you're just because of the momentum, you're going to see my oscillator continue lower and then curl up later. It's going to be a lagging indicator, right? So if we do see a follow through to the upside, you will see this oscillator curling up at that support that we've been seeing, this oscillator finding support, and that these levels became the bottom, at least in the short term, right? And that's what's going to happen. We see advancement in price, hold above my short-term moving average. That's what's going to happen. However, bears going to bring it down even harder tomorrow, break below that rising support and the midterm moving average to retest this gap area here. And my longer-term moving average trading at 357.50 now. If these things start to come all the way down to retest that moving or that gap and the moving average at 357, this thing could push it all the way down to here, the extreme low point. And then we'll probably find support at 357.49. So tomorrow will be important. I'll tweet things out at 2K Kim. If I see anything, enjoy your evening and good luck trading tomorrow.